you're about to see here on Squawk Box. This is the real battle of the century. I got Santulli and Leisman here. Can I paraphrase really and pigeonhole Rick and you just to get this started? You got Rick here, who appeals to the populist streak in all of this. He hasn't wanted the Fed or the government to do anything through the entire financial crisis. Let the chips fall where they may. We'd all be living in some bombed-out, desolate Terminator 1 type setting at the beginning of the movie if you had
kind of like where we're at now.
And then we've got you that think that there is a benevolent streak that government can perform from time to time to save us from ourselves. And that's basically where you two get. You get mad that he can tap the populist streak by saying this when we'd all be, you know, in tatters.
The thing that burns me up is that if we followed Rick's prescription for the economy, then exactly what you're saying. I'm taken by the It's a Wonderful Life movie, right? Rick is in favor of Henry Potter winning.
He wants to live in Potterville.
The apocalyptic vision from there is the one that Rick wants. But there was a name for people like Rick in the 30s. They call them the liquidationists. Let them move. And even more so, if I could just get going here.
No, get going.
If I could just get going here. You oppose what the people in Bedford Falls did, basically pooling their money to save George Bailey. You don't want them to do that. You don't want them to pool their money, let the chips fall where they may.
Now, we did hear Steve say the people. You didn't say the government, you said the people. I have no problem if people want to get in a room and do the right thing. I have a problem when the government is in the room and they're doing something which they think is the right thing. And I think systemic risk needs to be avoided.
Right.
Totally agree. But we've gone so far beyond systemic risk, and I'll leave you with one phrase. And you had it with your interview with Mr. Lockhart yesterday. Redefault. Think about this. They're trying to do everything to make it better, but they can't. Now they have to have different debt-to-equity ratios. Why don't they just give the houses away? Why don't they burn them down? But in the end, I think market forces need to work. All we're going to do is ring up a big tab, and when this murmur stops, and I think it's going to be a murmur versus a depression. When we get on track, all these programs are going to get such traction so quickly, they're going to have to backpedal and figure out how to remove the market, or the government from the market.
I agree with you on that. I'm not sure you're wrong about the mortgage default issue. I think they need to try a little bit harder, perhaps, get the debt-to-income down a little bit. That might help a little bit. We also don't know if some of the redefault was a result of the economy taking a second leg down. Rick, the fundamental point is when I look at what's happening with the market, you insist upon relying on the market. I look at the market and I see the market not functioning. When I look at the Treasury yields, when I look at where spreads are,
the market
is the people. The reason it's not functioning.
Cannot function.
Not functioning is a code word for we don't like where the market is.
No, it's
the
not.
last 5 years, the market was in Shangri. Who can sit down? You know what? I'm sorry, guys, but I hate sitting down. You know, I can't get the energy. The Shangri-La of the last 5 years was the anomaly. Nobody likes it. So now what we say is the market is no good. It doesn't work. Actually, it's working very fine. We just don't like what it's saying.
Steve didn't like those 10 years at 2.5. They're not where they don't know where they're supposed to be, and they're not where they.
He's talking out both sides of his mouth because he's also the guy.
His mouth or his
whatever. You're the one who's. But no, because you're the one who says, look, these Treasury yields are not emblematic of where they should be. You're the one talking about these ridiculously low Treasury yields. The government this week.
Hey, guys, show a chart of the last month of 10-year note yields.
No, you get back here, Kernan. You get back here. You're not going anywhere. You started this whole thing. You sit down.
By the way, on a relative value, Joe is 6'6", just so people know.
The spread is really high. But look, this week, the government is going to auction off some $400 billion in Treasuries. What's happened? Look at that. What's happened?
Okay,
is that
here's
a
my
normal
point.
Functioning market?
It is a normal functioning market that's being distorted by abnormal government speaking and that's the quantitative ease move. See, my problem is there isn't a market anymore. There is a market that's trying to function with outside forces that are distorting it. And I think whether it's targeting 4.5% or advertising quantitative eases, the market should be able to work these things through. I don't want systemic risk, Steve.
I think that's probably true, Rick. These things were happening long. We talked about getting 3 cents for a 3 month. Right.
But Joe, here's the thing. Rick and I were wondering. No, we were wondering what you think. Yeah, we were just wondering where you sit here all the time. You stir up the trouble. What do you think?
It depends on
the day, the
hour, the minute.
You wouldn't last a minute in the ring with us, Rick.
No, you're right,
Joe.
Because I'm willing to go I'm willing to go both ways. No, I'm willing to go on either side of any argument.
To the side here a little bit.
I'm willing to go on either side of any argument. I am.
Joe, I just want to make one final point. To this point, I think what the government has done is to set the rates for its liquidity, Rick, at a place where when markets return to normal spreads, and I know you're going to argue with what is normal, then the government is no longer competitive in that market. For example, some of the TAF auctions, some of the other data, some of the other spreads that the government has set for the cost of its liquidity are such that they wind down by themselves. You no longer would have a reason to turn to the government because the market itself would be offering a more normal spread.
Just the way the government pulled themselves out of subsidizing will after the Civil War. Oh, sorry, I don't think they have yet. Or Amtrak, okay?
Well, that's
the government going to get out of our market before they remove themselves from Amtrak.
But the price is already in there, Rick. The price is already in there, so they don't have to remove themselves.
No, but they
it's an
have
automatic
now
function.
Affected the spreads. Their presence has affected the spreads. So the risk-reward to going to your bank and getting a loan for your house doesn't reflect the real world. It reflects the government's version of the intervention of the real world.
We've got to wind this down. Let me will this... Have we built up so much moral hazard now? I mean, we're in trouble. We've built up so much moral hazard we can never count on the markets operating effectively.
I don't know that we're in trouble. We're just not going to have, I think it's going to inhibit the animal spirits of the country that I'm most proud of as an American.
I think there's two parts of America. One is the part where we're ruggedly individualistic, and another time when the country comes together and operates cooperatively.
He's going to have the last word.
No, and I wish we could come together, but we're not coming together. We're having a shotgun government wedding.
All right, we got to stop here. Thank you. It usually doesn't work when we try to get things started, but I think it actually sort of did, and you had to stand up. That was a good sign. Thank you. Thank you,
and I'm
Steve.
still as tall as he is sitting down.
No
Everything you guys said that time around.
But you shouldn't have called him Chrome Dome. Oh, no. Am I still on?
Oh, boy. Anyway, Jim Chanos, our guest host, is sitting here. He's been